So I really want to start us off by asking, how excited would you be to learn that we already have everything we need to dismantle our broken, racist, and misogynistic finance ecosystem? That's what we're here to talk about today. And I hope that you all are as excited as I am about this topic. I'm Michelle Thimesch. I'm a lawyer and the CEO of Crowdfund Main Street. Crowdfund Main Street is an investment crowdfunding platform that takes advantage of a relatively new law, about 4 years old, that allows anyone to invest directly in small businesses and startups that they love. I think we should take a minute and really let that sink in. This is really groundbreaking, as we'll hear from Bill, that this means that we have everything that we need to break this winner-take-all finance system that doesn't serve the vast majority of us. And it also applies to other systems of oppression, but today we're going to really focus on money, the flow of capital in our local communities. And we're focused on money because money's power. And when power is up for grabs, like it is now, change agents like us, people who are gathering around this topic, change agents like us, we don't squander the chance to make sweeping reforms that benefit 100%, not just the 1%. Even though small businesses are the economic engine of this country, over 82% of them fail due to lack of cash flow. Nothing else accounts for the struggles of small businesses more than the access to capital. And the ripple effect of this finance crisis is felt throughout our country. Everybody sees it. It's a vicious cycle. Not enough money circulating in the community to provide living wage jobs, good schools, a civically engaged population, local charm and character that reflects the population, and of course, a thriving municipality, tax revenues enough to build and maintain proper infrastructure. This is not a pipe dream. Today we begin the discussion of what I hope is the first of many, about divesting away from our tired, scarcity-driven, racist financial system. And there is really nothing else we need to do except implement. So let's start getting into the meat of that. I want to introduce you to our special guest, Bill Huston, who is according to Inc. magazine, in 2014 was named one of the top 19 global crowdfunding experts. Bill has been involved in crowdfunding for about 6 years, which is 2 years longer than investment crowdfunding has been legal. So he came up through the rewards and donation-based crowdfunding system and has had that much longer to become an expert in crowdfunding and what makes crowdfunding work. My personal interest in Bill and having the conversation with Bill is that his deep, abiding love of local communities has has really laid the foundation for all of the pioneering work that he does. And I know that he is in a position to help lead us where we need to go, to that pouncing stage, which I think we are facing now. So I'll let Bill talk for a few minutes, introduce himself, tell us a little bit about his background, and then I have some questions to get us started, and we'll go from there in dialogue. So welcome, Bill, and thank you so much for doing this.
Thank you so much, Michelle, for inviting me on and giving me the opportunity to talk about some of the experiences and insights that I've been able to gain in crowdfunding. I always like to start out with this story about how I came to crowdfunding. And my son and I, we had a business, it was called H2 Communications, and he was a videographer, and I would actually promote the videos that we did for small businesses using Facebook and Twitter. And he was in a government program called CAP, Community Action Partnership, here in Louisville. And the director of the Community Action Partnership told us one day that there was a really cool website called Kickstarter. And that if you shot a really cool video, I'll never forget that. She said a really cool video, people would send you money to finance your business. So we shot about 7 videos on a Saturday. And she put all these videos of the businesses, the startup businesses that were under her up on Kickstarter. And as you can imagine, we didn't raise a single penny. And the reason we didn't raise a single penny, which I came to find this later, was because we didn't market it. We hadn't built a crowd. And as I started looking into Kickstarter and studying Kickstarter and learning more and more about it, I came up with this that I call the one fundamental rule of crowdfunding. And that is, if you don't build an excited and engaged crowd, you will not get the funding that you're looking for. And that has kind of been my focus since I entered the field, is how do you build that excited and engaged crowd, that crowd that is going to back you. And then when you actually turn them into a crowd, how do you take them from a crowd to a community? This morning on LinkedIn, there was a great post from Kathleen Minogue at Crowdfund Better. And, she talked about, is it the size of your network or the quality of your network? And it's always the quality of your network. It's better to have 100 people that are really engaged with you than to have, 10,000 people who don't engage with you at all. So, that's really where I come at this from. And as a person who started out in community organizing, investment crowdfunding is a game changer. It is a revolution in early stage capital development. I mean, it is so big. And there's another story that I would like to tell, but I don't know if this is the proper time or if we want to, if you want to ask a question before I get into to an actual experience that I thought was very interesting and really opened my eyes to the power of investment crowdfunding as a community-led economic development tool.
I'd love to hear that. I can't think of a better place to start. That sounds great.
Okay, this was really interesting to me. In about 2007, I was working with an organization called Community Farm Alliance. We had about 2,000 farmer members throughout the state of Kentucky. The state of Kentucky had a very unusual relationship with big tobacco, in that a lot of the farms that raised tobacco in Kentucky were small family farms. They weren't huge farms. And, from year to year, the big tobacco companies would buy from different farmers to try to provide a level of, in their purchasing of tobacco. As tobacco, the state wanted to transition these small family farms from tobacco and transition them into other markets. So the mission of Community Farm Alliance was to actually create urban markets where these Kentucky farmers could bring food in. So my focus was on West Louisville, which is a food desert. They call it urban food desert. And it has very little access to fresh local foods. And then there are obviously a myriad of other issues that come from that, health issues. Again, you can look at, when you look at West Louisville and you look at the opportunities or the opportunity to get to food, to have fresh, healthy food that is life-sustaining, it's just not there. So that was the real focus. And we created a business, at the community level called Urban Fresh. And what we did at Urban Fresh was we initially created these mobile food markets, farmers markets, where people could actually show up at different parks, right? And we would schedule this, and we would go to these parks, or we would go to schools and, actually show up and provide the opportunity for people to get this food from Kentucky farmers. One of the reasons that we were unable to really grow that business and move forward was because access to capital was completely restricted to philanthropic donations that had to go through the organization initially. And even if we had some levels of success, we didn't have the opportunity for the people in the community to pool their funds, right? And when I say pool their funds through investment, I mean, be able to invest in something where there's going to be a return, where there is going to be not just something for community organizing, but it's going to be community-led economic development and the opportunity for people, for businesses, first of all, to access capital that is just very difficult to access in the traditional system. And also to give people, through inclusive investing, people in the community, the opportunity to build wealth and have, you know, an opportunity at some passive income as they begin to build wealth around the businesses that they want in their community, the businesses that they need, not the government, not philanthropy, not big developers coming in and telling people in the community what they need. And I think that this is the real power of investment crowdfunding. And as people become more knowledgeable about it, there's a real opportunity for this to be a bottom-up, community-led economic development tool that really serves the community at the community level. So let's fast forward to the introduction of investment crowdfunding. And I had the opportunity to work with a lady named Ina Jones from the south side of Chicago on Buy the Block, which is a portal. And she was able to raise $38,000 to start the Roots and Vines Cafe, you know, using investment crowdfunding. And I always look at those two contrasts. Did not have the opportunity to do that. It wasn't legal. It wasn't possible. Today, it is possible. And I look at those contrasts of those two businesses, those two events, and I really see power, and hope that everybody else kind of got the feel from my storytelling about the power that investment crowdfunding can bring to communities, from both businesses and from, you know, the community stakeholders, and being able to build wealth through inclusive investing. So I really like that story. I think it's a great introduction to what to the power of investment crowdfunding.
Yeah, thank you for that story. It's great. And this is what Bill and I have in common, is that we feel really strongly about the power of this tool. There's a quote that I have of yours, Bill, that just kind of gave me chills when I read it. And I want to read that quote to you, and I want to have you speak specifically on this topic. It's very related to what you were just talking about, but it has more to do specifically. You say, I personally believe that equity crowdfunding, investment crowdfunding, is the most significant piece of financial-based legislation for African Americans since the Emancipation Proclamation of 1863 of Southern slaves. Wow, that's huge, right?
Absolutely, it is absolutely, and I think that if you sit back and you really think about the relationship that the Black community has had to America at large, you really see this, right? For decades, for centuries, right? In this country, there has been this system, right? I guess you could call it a system of oppression. I don't know. It's this system where all the time what we saw was that Black labor always resulted in white wealth. And this is the first opportunity, you know, for African Americans to really have an opportunity to come together, pool their resources, and take that labor and turn that labor into wealth for the African American community. It just, that opportunity has never really existed. And I think that this is so powerful. And when I first discovered Buy the Block, if I could talk about this really quickly, in 2017, I was at the Crowd Invest Summit in Los Angeles. And as I sat there, I was on stage and I was on the marketing and PR panel. And, you know, this room was filled with maybe 1,000 people who had paid a lot of money per ticket to hear about, you know, the future of investment crowdfunding. And as I looked over the room, there were maybe 4 or 5 African Americans in that room. And I thought, wow, the people who could use this law, this legislation the most, are the least informed about it. I talk about By the Block, and I think the absolute world of Linda Smith, the founder, because what she has done is she has created needed infrastructure, right? So being able to get on that road, being able to get into the car, right, was the Legend 3. And she has created a place where people from the African American community can come together and invest and build businesses and build wealth and build the businesses that are needed in their community. And the reason that I think that that is so important is because the way the system works, the way the system has always been, is that it's very extractive, right? That money is consistently removed from the African American community. It never stays in the community. It doesn't circulate in the community. One of the things that I think is very important, and since I can remember, I've heard people talk about how it's important to buy black. And I think that is really important to keep money circulating in the community. But what I think is more important, and what I think may be able to trigger the whole thing about buying black, is that if you invest black, then you have an economic reason to buy black. I think a lot of times there's no real reason behind that, and I don't understand it. And some of this is an American issue, right? That we want to shop at Walmart. And, and when I shop at Walmart, I don't understand that I'm putting people in the manufacturing sector out of work. I never really look that far down the road. I'm saving money, and that's all I'm really thinking about. And what I think investment crowdfunding has the opportunity to do is to really allow people in communities, not just the African American community, but even at the local level. And I think that this is something that is really going to be illuminated and magnified because of COVID. A lot of small businesses, a lot of the small local businesses are looking for ways to find access to capital, looking for ways to get funded. And, the government and the banks have demonstrated that they are not the efficient methods of getting capital to the bottom of the ladder. They're good at what it is that they do, but not good at getting it all the way down to the people who really need it at the neighborhood and the community level. Yeah. And what I've seen, and I've had the opportunity to work with a couple of different groups. I had the opportunity to work with Funding Hubs project out of the UK with Barry James. And what's very interesting about this is what Barry talks about is businesses that already have customers. They have the social proof and they have the market validation that, in the crowdfunding world usually takes a long time to build that. But they already have it because they have customers. And what needs to happen at this point in time is that they actually just need to reconnect with those customers, reconnect with that customer base, excite them, engage them. And that's probably not as big a step as you would think, because they were already purchasing from you as customers. So being able to raise capital from your customers today and sell them a product, right? Pre-sell them a product that will kind of ensure that relationship over a long period of time is a really powerful opportunity that exists right now. Working with Honeycomb Credit out of Pittsburgh, and they have these loyalty bonds. And, we're kind of working in collaboration, doing some of the training with the small business owners to allow them to learn and understand, how crowdfunding works, how investment crowdfunding works. But these loyalty bonds actually allow people to purchase at, let's say, for example, you can purchase the bond for $100 and you actually get $130 worth of purchasing power, and that's spread out over 2 years. And, that is very powerful. That is very powerful if you think about everything that is brought to the table, for these small businesses to be able to access capital now and to kind of ensure long-term business for them in the future. And this is the power I think that exists within investment crowdfunding. And the last thing I'll say on this topic is also there's the opportunity within this this feedback loop that is created by investment crowdfunding to be very innovative, right? The opportunity for innovation is just staggering, because not only am I thinking about new ways to engage my customers, new ways to build my business model, I can ask them directly and they'll tell me what they think. You know, do I want to buy this? Do I not want to buy this? Do I want this product in green, or do I want this product only in red? So I think that the power of investment crowdfunding and crowdfunding in general is in the ability to engage with your crowd, whether they be investors or backers. You know, one of the things that I like to talk about is the return on crowd. Not so much the return on investment, but what is the return on crowd? Because there are so many more benefits than simply the access to capital.
Yes, yes, absolutely. So many more benefits than the access to capital. I think, you know, one of the things that you talk about so powerfully is in fact this access at the community level and the ability to transform communities. What is your sense of sort of, given what you've seen since investment crowdfunding has come on the scene, what have you seen in terms of awareness in general? You know, obviously one of our biggest problems is that because regular retail investors have essentially been boxed out of investing, direct investing for so many generations, you know, we're behind the eight ball because people don't even know what they don't know. So I'm just wondering if you're starting to see a trajectory that is more awareness, more open, and what you think we need to do going forward to increase the awareness and utility of this tool.
Yeah, absolutely. What I've noticed, even in my business, since the beginning of the lockdown from COVID, is that people are searching for ways to raise capital. They see that traditional models are not going to work for them, so they are searching. So there are more people who are actually coming to crowdfunding to really discover how it works. You know, they've heard about it. There's still a lot of people who don't really understand crowdfunding. And I think that is key, is getting people to understand crowdfunding. That crowdfunding isn't begging, it isn't asking people to do you a favor. It's about creating a shared vision, a product, a service, having people buy into that shared vision. And, you know, with Title III, you can literally buy into that shared vision. And I think that is really important. And I think that there has to be a very strong push for the retail investors to understand crowdfunding, to understand the power and the implications of crowdfunding, and also understand what that return on crowd is. Being able to engage, you know, with business owners. You know, when I talked about that adaptive feedback loop, being able to engage with the people, especially at the local level. If I can back up for just 1 second, when people started talking about investment crowdfunding, you know, in the early days, and you know, it was still kind of a dream and something that we wanted to see. Everybody that I talked to, you know, they talked about, you know what, man, now I have the opportunity to find the next Google. And I never thought that was going to be the real power of investment crowdfunding. I always thought it was going to be something that was very hyper local. It was something where people would be able to invest in their communities, invest in projects, invest in real estate, be able to invest in businesses that were in their communities that help the community. And when I say help the community, by creating these businesses, you're creating employment, you're creating jobs, you're keeping wealth in the community. You know, these small business owners are more apt to be willing to sponsor a little league baseball team. They're more apt to be a part of the community because they live in the community. And you know, what they do is not so extractive. It is more them being a part of that community and being stakeholders. We talk a lot about having having business owners being able to come together with investors and different consumers, customers, vendors, and being able to really create community stakeholders. That's where we really want to be. We want people to be in this space who understand the value, not only of their investment, but they understand the value of their investment in the community that they live in, and what that return looks like. So I think that as we begin to move forward with this educational process, I think we have to not only educate the business owners, but we have to educate those retail investors, and we have to talk to them about that shared vision. And that shared vision needs to be about being stakeholders in the community and not just, stockholders, whatever, in a particular business. And, what does that look like? How do we begin that process? How do we start talking about to people who don't know, to people who for the last 80 plus years have absolutely been locked out of this process? So you started this conversation with something that I heard Brian Beckton, one of the guys at Cutting Edge Capital, and he's on the NC3 board with me. He said this, and I thought it was so powerful, is that no laws need to be changed. There doesn't need to be any new legislation. We just need to start doing this. We need to start doing it. And, being able to get the word out to people and really explaining to people, how this works. If I could give a quick example of an actual failed project that we had here in West Louisville. We called it the West Louisville Opportunity Fund in a particular neighborhood called the Russell neighborhood. There's slated about $1 billion in investment in the community that has been disinvested for decades. And we started this fund, and the idea of the fund was to allow the people in the community to be able to participate in this. And the analogy that we used was you can be run over by the gentrification bus, or you can get on that bus, right? And you can become an investor. And if you're really a risk taker and ambitious, you can create your own offer and you can drive that bus. Mm-hmm. And I think that a lot of people really don't understand that concept. Yeah. Because they've never seen it, right? A guy said at a meeting one time, sometimes you have to seize things to seize things. And I think that a lot of people, because they've never known anyone who has invested in a private placement deal, right? They don't know anybody. They've never seen it. They've never seen it work. They've never seen it happen. So it is a huge leap from telling someone about how investment crowdfunding works to me pulling out the checkbook and, parting with that money. So I think that there has to be a real effort at the community level to teach people on both sides of that equation, not just the business owners, but also the new retail investors. And, what does that look like?
Mm-hmm. Yeah, so many things that you said that I want to touch on. One is really that distinction between sort of community engagement and not having community engagement, our local flavor and character of our communities. If you look at the data, there's about a $25 difference in per $100 spending when you have a community made up of a lot of Walmarts and yogurt lands, those multinational corporations, and such that the small local businesses are struggling. That's really a flag. And it's happened all over our country. As soon as that shift starts happening, where the balance starts tipping in favor of the multinationals, as opposed to that local character and flavor with our, homegrown small businesses, we see that deterioration of $25 per 100. That is the difference between living wage jobs. It's the difference between civic engagement. It's good schools, firefighters, teachers, philanthropy. It's profound how much of an impact it is, not to mention just destroying the charm and the character of our communities. So, that's one of the reasons that it is so powerful. And then the other thing I want to say about that is that, well, two things. One is that I was pretty astounded to learn. I talk to people of color all the time. One of the demographic that I primarily serve are more marginalized entrepreneurs, women. We love highly evolved white men as well, but 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 you know, is to learn that the Black community is the most philanthropic demographic in our country. And when people come to me, people of color who say, there's no chance for me to be able to raise money because my community doesn't have money. And when you think about that in the context, yes, they do. Everybody has some money, right? And I'm not saying that philanthropy is not important and that we don't want to tithe and that we don't want to give. I'm just saying that you are talking to a demographic that understands how we put things together, the resiliency of making things happen, scraping it together for the right reasons. And that's one of the things that I think is pretty powerful. The last thing I'll say before asking you another question is that you keep talking about something that is incredibly important in my opinion, which is the crafting of your own offering. One of the things that we believe really strongly at Crowdfund Main Street is that you ought not to be pulling instruments off the shelf that you are using to raise money. You know, you talk to a founder who has found a convertible note, a safe, or whatever they've found, and they're searching on the internet, and that's the instrument they want to use. And 9 times out of 10, that founder can't explain to you what that even means to their investors. So for someone who has invested her whole life, it's difficult for me to imagine your request to steward my money as an investor if you don't have an understanding of what it is you're offering and how that specifically relates to your business. Do you find that people are naturally really creative? Because like you say, the sky's the limit. We can do a lot, and on both equity and debt sides. So are you seeing the demand and sort of the interest in more creativity around structuring of offerings?
Oh, I am, and I think that what you say is really important there. Can I take one step back to something that you said? Point number 2 about the African American community, and the African American community. So here's a shameless plug. I wrote a couple of posts on LinkedIn that address these 2 issues. One is the role of the Black church in actually building wealth and being that place. Because like you said about philanthropy, what you find is that there are billions of dollars that are donated to the Black church annually. It is astounding. And the other is I wrote an article about crowdfunding. It was about donation crowdfunding, and there was over $400,000 raised when the Black Panther movie came out in the Black community to be able to send young underserved African American kids to see this movie. And the push of my article is, if you understand crowdfunding at that level, let's take it one step further and not invest that money where there is no return whatsoever. So there's the benefit of maybe being able to see the movie, but all the popcorn, all the pops, all the ticket sales left the community. That same $400,000, if it were invested in businesses that continue to serve the community, if it was invested in being able to build different infrastructure and different ways to get food in and out of a community. And I say that going back to what Miss Jones did. And not only did she build the Roots and Vines Cafe, but she made a concerted effort to engage Black farmers in Illinois. Right. And to be able to create that pathway for those farmers to be able to get food into the most underserved communities in Chicago. And I think that those things are very, very important, is that not only when we craft our offers, do we need to look at the immediate need that I have as the business owner or the developer, but also what that looks like in my community. Also, what is that ripple effect? If my business, if my offer is that drop of water into the pond, how does that ripple out into the community in the form of opportunities to build wealth? Job creation. And not only job creation for the people who work for me, but job creation because we are building a local economy, and that local economy builds upon itself. I think about how different it is at the global system. I was going to use another adjective, but I'm just going to say how different at the global level it is, that that steel or iron ore may be pulled out of the ground in the northern states, put on a boat, sent through the Great Lakes, all the way, to the ocean, in these mighty ships sent across the world to China to be refined and manufactured, and then sent back to the United States to be sold at the retail level. And that somehow that makes sense. And it makes sense because that money's, is not coming out of my pocket at the moment, but we don't think about the carbon footprint that exists there. We don't think about all the people who have been put out of work for me to save $1 on a particular product. And so when I think about the innovations that you're talking about in offers, it's how do we get people to do multiple offers, and or not multiple offers, but offers that are built around multiple business opportunities in a particular community. How do you start to build the infrastructure for me to maybe be the flour company who sells to the bakery? What does that look like? And when you start talking about investing and building these local economies and being a stakeholder, then my view has to be wider. It has to be, how can I impact the total local community where I live from top to bottom? I hope I answered your question, as I felt like I talked a lot.
No, that's good. You're here to talk. And I'm happy to say that I have a model for that. I've been working on that for the last couple of years. And now is obviously the time, to launch something like that. So I wanted to check in with Jenny. She's been monitoring the chat, see if we have any questions from participants or she herself. Anything going on, Jenny, that we should know about?
People are sharing some great comments. I haven't seen any questions at this point.
Okay, good. So if anyone has any questions, let us know, either raise your hand or type something in the chat. We'd love to be able to accommodate you. I think too, Bill, talk a little bit about kind of how you work with individuals, like who do you serve in your current work as a consultant, and what is sort of the best use of you professionally?
So initially, especially back pre-investment crowdfunding, I managed a lot of campaigns, or I maybe do something specific on a campaign. And then as we've moved into the investment crowdfunding, working with people to, especially on the marketing side, to market their campaign, to be able to have a really nice presentation or offer. Those are some of the best places that I've had experience. And just recently, what I've been doing is I've been trying to move into a space where I do training and education and teaching people. So right now, one of the projects that I'm really proud of is I'm working with a group of people in Detroit. And what we're doing is we are actually training people about how to use and what the benefits are to investors of using real estate crowdfunding. As the city of Detroit comes back, we formed a group, and actually this month we're going to kick off a 3-webinar series talking about the benefits of, number one, we're going to talk about crowdfunding. Let me back up there. We're going to talk about crowdfunding and what it is. And I think that one of the most dangerous things is people who have a little knowledge of crowdfunding are probably more dangerous than people that don't know anything about crowdfunding. I think that when we talk about crowdfunding and we talk about the essence of crowdfunding and being able to get, small amounts of investment from a large group of people, but that doesn't just happen. There has to be a shared vision. There has to be a reason for people to want to come together in part with their hard-earned money. And that, I think, is part of what I do is to help people build that shared vision, to help them to build that offer. And I think that it's very important, and this goes back to the Kickstarter and rewards world, is people would want you to do their campaign. And, for me, it's kind of like, me writing your business plan. I can help you edit the business plan. I can give you some insights and experiences that I've had that may make it a stronger business plan. But it is your business plan. It is your offer. It is your vision. And what I think really has to happen is that, you need to formulate this vision. You need to put that vision out there and share that vision. And, people like me can help you, by giving you insights, by giving you our experiences and our best practices. But this is something that has to be done by the owner at the community level. You have to engage people. And because crowdfunding is something that's not going to happen overnight, as much as I'm selling a product or a service, I'm selling myself. If people don't believe in me, if people don't join that shared vision, then they're not going to invest in me. And that's where I think that, that my experience and insights, especially even from the rewards world, are beneficial to people is, how do we create this shared vision? How do we make that shared vision the best, the most effective, the most efficient? But it has to be your innovations, that we really bring to the table. And I think that being able to move more over into the training and education side of things, trying to develop, different products that people can consume at their leisure, I think is really important. But also there has to be this aspect, and this is kind of a pushback on that whole digital course world, is that if I just sell someone a digital course and they don't have access to me at some level, or to a person, not just me, but someone who has that hands-on experience, then I'm just selling you information, and nobody really needs to buy information because all the information is on Google, right? There's no information that I know that you can't find on Google. It may take you a lot longer, and you may not have, the value of the insights that I have from experience, but that information is there. So, that I think is what's really most important about the work that I do, and being able to really work with people in the industry. If I can touch on this, I saw a question as well, and I want to quickly. And I think what COVID-19 has really forced is the people in our industry to collaborate more. For the people in the crowdfunding industry, I think that crowdfunding has done a really bad job of going out there as an industry. And, we have all kind of, and I think we're all guilty of this at some level, we have all really kind of pushed for our particular, platform or business or industry, and we haven't really pushed it out there together as a collaborative effort of how we can improve, access to capital for communities and provide inclusive investing opportunities for communities. And I think that COVID has really kind of push that, for the very fact that you and I are, having this conversation here, that I'm working with other, platforms, and of course the great work that they're doing at NC3. This NC3 has been around, but really being able to show how community capital can really impact communities.
Yeah, and I feel similarly.
Michelle, sorry to interrupt you, but we do have some questions in the chat. Do you want me to?
Sure.
So Zach asked, how do you manage the increased risks behind such early stage investments for individuals that may not have a well-diversified portfolio? That's one question.
Okay. One of the ways, and this is what I think is very powerful about the local aspect of this, is that if you are investing locally, there is more power that you have as the investor. And we talked a little bit about not only being an investor, but being a stakeholder. I like to use the example, if I invest in the local bakery, how many donuts am I going to eat? How many people am I going to tell about that bakery? So as a stakeholder, I have an increased role in what the success of that local business may look like. So I don't necessarily think that we can take the same language and the same perspective of investing in multinational corporations and bring that down to the local level, because in my local investments, I am going to have a much different role. There's going to be a more active role that I have the opportunity to play as a stakeholder and not just as a stockholder.
Awesome. Michelle, did you want to share that link that you were talking about? Or I could share it, but do you want to talk about it?
Oh yeah, I do want to mention, so for any of we have a lot of tools. Jenny and I have been working really hard over the last several years to create a lot of tools, a lot of it on the founder's side, and of course she wrote the book. But I would like for Jenny to include the link to an initial assessment, because one of the things that we see in our practice as lawyers in trying to help people craft their offerings is that we have developed some readiness tools. The initial readiness tool is now in the chat for anybody who wants to take that. And then of course, for those of you who are in community development, economic development, or interested in this concept of really building out local communities, we also have developed a program for that. So at the end of the call, we'll have an opportunity. I'm sure Bill will put in his contact information. You'll be able to reach out to him and have the conversation. We're only have another 10 minutes or so today, but I do want to make sure that you understand that we're willing to talk to you further about how you can participate in this. And we hope that there will be some movement forward that you can participate in that you would like to see. So
another question.
Mm-hmm.
So Corey asks, can you talk about emphasize ROI and that this is a long-term investment?
Sure. So it absolutely is a long-term investment. And again, as we've talked about innovation and innovative models, one of the models that I really like and that Mainvest is really pushing is, the revenue share, especially in this COVID-19 environment and whatever the new normal is going to look like. And that's kind of based on the revenue that the local small business is generating. And again, I really want to emphasize when we talk about local investments, as opposed to, to those multinational investments, being able to see that investment is probably going to take a longer period of time. You have to kind of be in for the long haul. You're not going to be just trading, but you're literally going to be investing. You're literally going to be a stakeholder. Will the return come? That return will absolutely come, I believe, over time, but it's going to be a longer period of time. And if you're investing in local businesses, that investment is probably not going to look like a huge exit, 3 to 5 years down the road, where you have this initial public offering. I mean, it can, but that's probably not what it's going to look like. And, those benefits and the return on investment is going to be quite different for a local investment. Never would I recommend that somebody spend their entire 100% of their investment dollars on local investment. But I think being able to shift a part of your portfolio over to something that is much more long-term, something that you're a stakeholder in, and you really have the opportunity to take an active role in seeing that success is really important. And again, really emphasizing that we can't use the same language and perspective of these multinational corporations that you see on Wall Street and bring that to the local level, because the investments are different. We play a more active role as stakeholders, and it's probably going to be a longer time before you see that ROI.
There's another question. Do we have time, Michelle, or should we start wrapping up, or what do you think?
You've got time, go ahead.
Okay, so there was a second part of Zach's question, which is, how do you ensure that these investments benefit all stakeholders?
I'm not sure. Yeah, I'm not sure that I fully understand that that question and maybe where it's coming from. Michelle, do you have any input that you'd like to?
Yeah, my thought is that question is directly related to the structuring of the offer. So by virtue of designing an offer that protects all of the stakeholders, that's how you ensure that that's the way going forward. And sometimes that's in restricting rights, protecting the vision of the company is a big part of structuring a proper offering, particularly when you don't have, you haven't launched this company for purposes of selling it in 5 years. You're not looking at that sort of venture style exit. Then that's where customizing and crafting your own offering allows you to be really deliberate about protecting all of the stakeholders. You need a good lawyer.
There is a question about nonprofits, but I'm actually going to skip that question just because that isn't really the topic of this conversation. Nonprofits can raise money from investors, but we're not talking about donations on this call. But there's another question. Are there litigation risks for a project sponsor if the investor is not educated properly?
I'll take that. I think I know what that means. So in other words, liability, let's say you launch a campaign on Crowdfund Main Street and you have all of your disclosures and an investor invests. I think the question is, what liability is there if that particular investor proves to maybe not have understood or something like that? As long as, one of the reasons that investment crowdfunding requires a portal, you have to use a crowdfunding portal in order to do this. And one of the reasons is exactly around those kinds of concerns for the investor, particularly unsophisticated investors. And so all of the disclosures, the Form C, everything that you will have to do to actually launch an investment crowdfunding campaign is far more disclosure than you would have to do, say, if you were going after accredited investors under another exemption where, I call that the wild, wild west, where you have to disclose nothing. So it's a pretty high level of due diligence and disclosure. And obviously, because it's a direct investment, the investor is responsible for making that decision.
Let's see. Are there examples of real estate investment projects that have been crowdfunded? Bill, I think you mentioned one earlier, but if you want to, either of you want to share anything on that.
Yeah, sure. That's a great question. As I said, that I've been a fan of Linda Smith at By the Block. Since I met her and discovered what she was doing. She just had her first $1 million raise. So they raised over $1 million for a real estate project down in Houston, Texas, called the Fifth Ward. I forget the developer's name, but yes, absolutely. To the best of my knowledge, By the Block and Small Change are the only two real estate crowdfunding platforms that are more focused. So By the Block is completely focused on non-accredited investors, and I think that a lot of the focus at Small Change is also on non-accredited investors. So you can check both of those out: smallchange.com, bytheblock.com for real estate. And as I mentioned, I'm working with a group of investors out of the Detroit area, and one of the things that I'm trying to bring them education and information on the benefits of crowdfunding these real estate deals, as opposed to just trying to do a fix and flip it where you're risking much more of your capital. And you have the opportunity to be a more passive investor in this for the people like me who are not real handy with the fix and flip.
Yeah, thank you for that. And I've got Crowdfund Main Street is about ready to launch a real estate related project in an opportunity zones. We're doing a lot of work along those lines and have a couple of interesting models in that too. We are running at the top of the hour. I want to make sure, Bill, that you put in your contact information if you want to share that into the chat, or would you like me to do that since you're on the phone?
Yeah, if you could just put in projectcrowd.co. And for anybody that visits projectcrowd.co, we have a free ebook called The Crowdfunding Essentials for you.
Okay. Oops, no spaces here.
I just did it.
Oh, okay, thank you. Slow to me. And I will also put in my email address for anybody who wants to reach out for further discussion. And any final words from you, Bill, that you would like to get in before we go?
The only thing I'd like to say to the people who are out there listening, whether they're retail investors or whether they're small scale developers or small business owners, is I'm going to steal this from Nike, right? Just do it. I mean, we just have to do it. All the legislation is in place. I guess we could always ask the question, are there improvements that can be made? But we'll get that figured out as we do it. Just do it. Take the opportunity to really use this tool for community-led economic development. Stop complaining about the banks and government and philanthropy, and just do it yourself.
Yeah, we can abandon those systems that don't work. We don't need to fix them. We just need to walk away from them and build this one from the ground up. So thank you so much, Bill. I appreciate you and your time, and thank you for everyone who attended. And we will do our part and end on time so that you can get back to your day. So again, thank you for everyone, and we will send out the recording. Bye, everyone.
Thank you very much.
Thank you.